We're just going to have a quick look at the Rolls-Royce accounts. These are the accounts and other features such as the Directors and Chairman's statement that are prepared every year, reviewing the last year's performance and looking to the future. You have to remember that it is phrased in a very positive fashion. It's the company presenting itself to the outside world, to all those interested parties, and wanting to put a very positive spin on everything that they do. The financial figures take the pride of place in the report. Here we have a summary of what they consider to be the main features of their performance, and here we can see the contents of the report: strategic report, all sorts of issues there, business reviews, business model. Quite an open and frank look at the performance of the company, but you must always remember they're careful to present it in as positive a light as possible. The Directors' report: companies' acts require certain things to be disclosed, such as the remuneration policy and the remuneration of the directors. The main body of the report is the financial statement section that contains in particular our profit and loss and balance sheet that we reviewed when looking at chapter 1, and we will review in more detail in the next lecture. Then we have finally other information. Here we have the Chairman's statement. As you can see, he's as positive as he can be about things. Progress in 2016 can be judged by how we've overcome our challenges. We've delivered on our commitments in a difficult year, while at the same time embarking on a significant transformation. Wonder what that means. And embarking on a significant transformation, I wonder what that's about. You must always be very careful when looking at the reports, if you're using it in any project or anything like that, to be very, very skeptical about what is written. Don't start falling for their sales talk and start describing the company as very successful, because that's what you've read in the report. It is a biased report, except for the accounts, the accounts are controlled by accounting standards and checked by auditors. So Rolls-Royce have less control over the reporting of the profit and loss account and the balance sheet. Then we have a review by the Chairman. How we create value, all in this sort of generalized business speak. Actually, they create value by building jets, essentially. There's no need for all this. More of the same. This is more interesting. It's talking about the revenue and dividing it up into the various elements of its civil aerospace section. It even reports the order book. As you can see, the order book is down from 2015 for the Defence Aerospace division. Market dynamics. Defence budgets are expected to show modest growth, flat in real terms in the US and the UK, so quite a frank admission there. Looking at the competition, we said the competition was one of the interested parties in the accounts. Business risks, we talked about financial risk. Opportunities, right, looking towards the future. This is the order book for its power systems. Again, you can see the order book is down. Underlying revenue, it's claiming, is up. More expensive engines, not too sure what that means. We'd have to look at the further notes to understand that. Chief Executive's pay here. Warren East was paid £2 million. Nice work if you can get it. But their pay does seem to be rather variable. So in 2015 he only earned £500,000. How did he get by? And you can see in the past there have been some very high earnings. 2013 was a bumper year for a certain John Rishton. We also see that Warren East was paid £80,000 for being on the board of James Dyson Group, the vacuum people. This is the report of their own internal audit committee, and they report on the external auditors that they appoint with the approval of the shareholders, of course. And we can see that for 2018 they selected PricewaterhouseCoopers, but if you look down here it says that for 2017 they have appointed for 2017 KPMG as the 2017 external auditors. Of course they perform internal audit themselves. If you take the ACCA, the original specification of the ACCA professional qualification was internal audit. So they have a considerable checking team internally, and the external audit to a large extent reviews those internal auditors' reports. Finally, we come to the financial statements. Consolidated income statement, that's what we've been calling the profit and loss account, or income and expenditure statement. As we said, it gets various terms. And then we have also the balance sheet somewhere. That's the company balance sheet, but here it is, sorry, the consolidated balance sheet. Consolidated means adding up all the performance of all our units, all our subsidiaries, everything in which we have a significant ownership. And all their various accounts are consolidated, added up to present an overall picture. So we are really interested in the consolidated accounts. And here we have the consolidated income statement. 1,000 million is a billion, so 14.9 billion sales, up from the previous year quite considerably. So we saw some bad news, but this appears to be very good news. Gross profit, however, is down slightly. So there's a lot to analyse in the accounts to find out why that has happened. Oh, I was expecting good news, but you can see that the performance in the previous year was a profit of 84 million, has turned into a loss of 4 billion pounds. So no wonder the earlier statements were a little bit cautious. As an investor, you wouldn't be terribly happy with that. You would want an explanation. And here we have the consolidated balance sheet. We'll be going into the details of both these statements in subsequent lectures. And we have the assets it owns and what it owes, the liabilities. And this is the shareholder interest. And there's our friend Warren East. The third major statement we look at is the consolidated cash flow statement, and here it is. It's the most recent of the statements. In my opinion, it doesn't add a great deal to the balance sheet and the profit and loss account. Then, after the accounts themselves, which are highly aggregated because all the transactions of Rolls-Royce are being condensed in income and expenditure, condensed into one page, which is amazing really, considering the huge volume of financial transactions and businesses that it undertakes. This provides greater detail and goes on at considerable length. And as evidence of the complexity of the operation, here is a list of its subsidiary companies. A lot of them cited in Derby, South Africa, I see, Brazil. So it is a multinational company with lots of units incorporated abroad as well as in the UK. Finally, we have the Independent Auditor's Report. Our opinion on the financial statements is unmodified. Not sure what that means. However, the crucial statement is this one: the financial statements give a true and fair value of the state of the group's and the parent company's affairs as at the 31st of December 2016, and of the group's loss for the year then ended. That is, at one time, that was just all an auditor's report would say, that they were happy. It's a report essentially to the owners, the shareholders of the company, assuring them that they've looked over the accounts that Rolls-Royce have prepared and they agree that they conform to the required financial statements. And in this extended report, it goes into greater detail. Goodness me, dynamic audit planning tool. Sounds ominous. And various issues that appear to have arisen during the audit, and notes offering considerable detail. They paid millions of pounds for this report, so obviously they feel they have to give some detail. Clearly they have been actively checking the accounts, and goodness me, it does go on. Finally, Jimmy DeBoo, Senior Statutory Auditor, for and on behalf of KPMG. So that concludes our look at the Rolls-Royce annual report. As we said in the lecture, you can get the accounts for any limited company by visiting Companies House. For smaller companies, it's not going to be nearly as detailed as this report.